Well, there's a couple ways. I say any plan is better than no plan, but long-term care insurance would be a good place to start, and you should do it. I got mine when I was 42. You should buy it in your 40s, 30s if you can. It's cheap. It's very inexpensive. If you wait till you're 60 and 70, it's very expensive. But you got to get home health care because, see, I always tell people, here's my plan. I never have to go to a nursing home ever. I get to stay in my house till the day I die. The nurse has to come to me, and Brad, you like this? I get to pick the nurse, okay? So I call it anti-nursing home insurance. I call it stay-at-home insurance, stay-in-control insurance. But that's one way. The other way is if you say, well, what if I pay all those premiums and then I don't need it and I just waste all that money? You can buy a life insurance policy that has a long-term care rider. Now, this policy does three things. Number one, it's an emergency fund, so like if you need money, you can take it out. Number two, if you don't need it and you die, it pays a death benefit. And number three, if you need long-term care, it has a big long-term care benefit. So $1 can do three things in that life insurance policy. And if you can't qualify medically, you can buy one of these annuities that springs up a bunch of income in your 70s and 80s. But you got to have a plan. It's the $1 million problem. Every one of your listeners has a $1 million problem on average for long-term care. The odds of you needing homeowners insurance are less than 3%, but you got a homeowners policy. The odds of you totaling your car between now and the day you die are less than 18 out of 100, but you got an automobile insurance policy. The odds of you needing long-term care are 72 out of 100. Well, I guess I'll let that one go. No, that's the one you should have. Let the other ones go. Well, now, don't do that. That was just an example. It's the one thing that's going to wipe people out. They gotta have a plan.